I'm John Weber with AM Best. Welcome to our webcast, State of the Caribbean Insurance Markets. AM Best analysts, along with a panel of Caribbean market insurance experts, will review the markets of that region. Now, we may mention the subject of financial strength ratings. A full explanation of AM Best ratings is available online at ambest.com/terms. The opinions expressed by the panelists are theirs and theirs alone and do not necessarily reflect the opinion of AM Best. Now, if you have a question or comment, you can send it in to us at webinars@ambest.com, and we're going to do our best to recognize it during our program here today. Now let's meet our panelists. We have with us today Ricardo Longchalon. Ricky is a senior financial analyst with AM Best. Ricky, glad you could join us.
Thank you, John, for having us. Glad to be here.
Next, we say hello to Richard Francis. Rich is a senior financial analyst with AM Best. Good to see you, Rich.
Thanks, John.
Next, we say hello to Patrick Ward. Patrick's the CEO of Bahamas First Holdings Limited. Patrick, glad you could join us.
Great to be here.
Joining us today from Trinidad is Dean Romani. Dean is the CEO of Guardian General Insurance Limited. Dean, glad you could join us.
Oh, hello there.
Last but not least, we welcome in Ernie Letby. Ernie's the Managing Director of Caribbean Alliance Insurance Company Limited. Ernie, welcome.
Thank you very much. Pleased to be here.
And Ricky, we're going to kick things off with you. How did rated Caribbean insurers perform in 2018 compared with the past couple of years?
Thanks for that question, John. One caveat as I get this, get this thing kicked off here is that my comments will primarily relate to property and casualty insurers. My colleague Rich will address the performance of the life health riders. On a consolidated basis, 2018 was a good rebound year after storm losses in 2016 and 2017. I guess we'll talk about rates and pricing a little bit later, but compared to 2017, the table on the screen, which I'm guessing that it probably won't be visible clearly for a lot of viewers. But if you look at that table, it's in our report. Gross premiums increased by almost 10% to 1.3 billion from 1.2 billion. Net premiums increased by almost 19% to 530 million from 446 million. And we saw net income increase by more than 800%, or almost $36 million. Just to put that in perspective, though, in 2016, consolidated net income for the region was 45 million, and in 2015 it was 65 million. So while it was a rebound from 2017, it still was a little bit below the levels of income before the storm years in 2016 and 2017. The combined ratio decreased 10.4 points to 96.2% from 106.6%. Now, most insurers would generally have been pleased with the 2018 results, apart from the insurers, I would guess, that would be domiciled in Barbados and any of those insurers that had exposures to Barbados sovereign debt. It wasn't such a good year for those insurers given the investment losses that they had to incur as a result of that country's debt restructure, which negatively impacted their net income and as a consequent surplus. So we saw surplus decrease, consolidated surplus decrease by 1.4% in the region. Rich?
Thanks, Ricky. So there are 8 rated life companies in the region, and the performance was a mixed bag, but it was favorable overall. There was a continuation of the growth story, but at a lower pace than we saw last year. Total revenues for the life group were up about 5% in 2018, with most companies showing modest growth in both premiums and net investment income. The premium growth correlates with the year-over-year improvement in the economies as the region's recovering from the storms that Ricky mentioned. Tourism is increasing, and the spending on infrastructure all tends to be spurring the economy. The increases in net investment income are mainly a function of growing asset balances. We're seeing continuation of asset growth, and it's not a function of the yield, it's more on the asset balances side. Net investment income was also mixed, but overall it increased 13% in the aggregate over 2017. nearly all the companies had positive earnings, but half of the life companies saw growth in that earnings, while the other half saw a little bit of a pullback on the earnings growth. The earnings were impacted by higher policyholder claims that we saw, particularly on the accident and health side. But there was also some benefit in the realized gains category where some companies were rebalancing some of their portfolios, and that benefited the overall net income picture for the group.
Ricky, how about PC? What did we see as far as investment returns go?
Well, I mentioned already in terms of investment income, and Rich alluded to it, John, the investment income and investment yield tends to lag global markets in the Caribbean. Takes a couple of years before, trends in the global markets actually filter down to the Caribbean. Generally in the last several years, we've seen a decreasing to flat trend in terms of investment income. But, rates and yields have been lower in the Caribbean, so it also depends on whether you're an insurer operating in one territory as opposed to multiple jurisdictions. Each of these countries have regulations regarding investments and restrictions as to how much you could actually invest offshore. So quite a number of the jurisdictions have challenges in terms of investments and matching investments with liabilities. So, generally, like I said, I think the ones that would be located in one territory would find it a little bit more difficult in terms of yield versus, some who are in multi-jurisdictions and can adjust, the investment portfolio accordingly in more liberal investment environments. But overall, I would think that over the last several years, you would have seen investment income either stay flat or decrease, based on decrease in yield in these territories.
So what are we seeing in the way of rates and pricing?
In terms of the pricing in the Caribbean, a lot of the books of the reinsurers are basically, of the insurers, sorry, are basically property. Most of it is property business. Typically there's, 60 to 70% of their book is property, maybe even higher on a gross basis. And they supplement that with auto insurance and to a lesser extent some of the other lines. So property pricing in the region is driven mainly by reinsurance pricing, because a lot of the cost and a lot of the risk is shifted to reinsurers. So if pricing changes from a reinsurance standpoint, insurers usually try to pass that pricing on to the clients, policyholders. So it's driven in large part, some insurers cede as much as 80 to 85% of their property book to reinsurers. So pricing is a function of reinsurance rates. And in the last several years, we've had abundant capacity in global and reinsurance markets, and that extends to the Caribbean as well. So pricing has been soft in most of the markets. The exception being storm-affected territories over the last 2 years, where some rates did increase from the reinsurers, and some insurers were able to pass that increase on to the policyholders. But overall, soft markets persist in the Caribbean, and rates are still a little bit lower than where they should be.
Thanks, Ricky. Are we seeing a penetration gap in the Caribbean? Patrick, what do you think?
I think we do, because it's largely a question of economics. And if you look at the cost of insurance for the average person in the Caribbean, and this is particularly so for the Northern Caribbean, where you've got a significant frequency issue and severity as we've seen in the last couple of years, a lot of people are going to find it very difficult to buy up to the full amount of insurance protections, particularly if you focus on what's happening on the property side. And as Ricky just pointed out, is really the predominant line of business for the P&C sector. As the economies improve, people will have the ability to buy more insurance protection to fill that penetration gap. But it's always going to be a question of economics. And there is a role to play outside of the traditional insurance boundaries, where governments in these respective countries have to provide or assist in providing some kind of stopgap measure as a means of providing maybe micro-insurance solutions for persons that can't afford to buy the traditional covers. If you don't have that happening, effectively you're going to see a continuation of that penetration gap, because it is not because there's not an awareness of the need for insurance. To a large extent, it comes down to the economics.
Are you beginning to see microinsurance in the region?
There's been a conversation that's sort of been developing in the last few years in particular. I'm not aware of a broad-based approach to any one solution, but I am aware that there are some conversations that are going on. And I think, if you're a government in a country that has a significant exposure to catastrophe losses, it is definitely something that you'd want to have a conversation about, because to the extent that people don't buy insurance in the private sector, it's going to largely fall on the governments of those respective countries to sort of provide some kind of solution for people that can't afford to buy insurance, that have significant loss and damage and need some assistance in sort of getting back on track with their normal lives. So there's definitely a motivation for governments to look at this and to take it seriously and to assist in providing some solution.
All right, Dean, are we seeing new entrants into the market?
Not many new entrants, but to elaborate on the point Patrick made with respect to economics, and rates, I'd also say it depends on where the rates were before the significant loss occurred, so that in territories where the rates were closer to the risk in that particular territory, so let's give an example of BVI, for example. BVI prior to Hurricanes Irma and Maria had their rates increased by in excess of 70%, as compared to their neighbors. The USDI only had rate increases that were around 10% or less. And the reason for that was, prior to the hurricane event, the rate in BVI did not reflect the risk for the territory, so that they had a more significant risk adjustment, to that particular rate. Similarly, in most of the Eastern Caribbean territories, there were rate adjustments, certainly for us, that was somewhere around 20%, between 15 and 20%. So they did not have a significant increase. And that is where Patrick's point of economics, came into play. It's so whereas in those particular territories, it would be very difficult, after a significant event like a hurricane, to have an adjustment that would be, let's say, 20% of the rates that they faced before. In addition, you have the challenge of having the sums insureds, which were inadequate before the loss. So you had a lot of average happening, which is where the loss is settled for much less than, than a position that would get him back, from an indemnity standpoint. All right. And for those insureds to take their values up significantly, it means that to have to increase your sums insureds and to have a significant rate increase, you find they would not be able to, to properly insure. So there are a number of factors that would, that would need to be considered, as you go along.
All right, thank you, Dean. Ernie, what are some of the regulatory concerns that you might have in the market?
Well, I guess every insurer has the same problem. Compliance is becoming a huge issue. It requires and takes a lot of senior management's time, and we are having to repeat the same thing for every island. And I think that somehow the regulators have got to get together with insurers and have got to share this information so that we're not wasting so much time. I think that a lot of the issues called for by the regulators are based on different markets to the Caribbean. And I think that that is another issue that has to be carefully considered. There are things that they are asking for, which is fine if you're a multi-billion-dollar company. But for small, privately owned companies in the Caribbean, it really stretches everything. and all they're really interested in doing is ticking a few boxes. And there's a bit more to it than that. And I think that somehow there has to be some getting together with the regulators to try and ease this burden so that it does not get out of hand. A lot of the things that they ask for are simply not worth the effort that everybody has to go to. And you have to repeat this for every island.
Well, John, if I can sort of weigh in, I agree with everything that Ernie just said relative to some of the regulatory concerns. My concern, though, is apart from that, which we're on the same page with. I think if you look at it from a forward-looking perspective, our concern is that the regulators, and this is really true of the whole region, are not really keeping pace with the kind of innovation and technology advances that we're seeing in the marketplace. So, for example, if we look at some of the requirements that are still in place for certain types of products, whether it's related to the way that we have to go about issuing policy wordings or different documentation around that, the regulation is really not keeping pace with technology. So from an innovation perspective, if I provide a digital solution that at the end of that solution allows a client to walk away with a cover that's been effectively rated, bound, and cover confirmed online in a digital format, there are still some products that require the issuance of a specific document that has to conform to a very old regime. And so you've provided the client with a good experience from a digital standpoint to begin with, but the last step in the process requires a manual intervention, which effectively negates elements of that entire experience. And so what we need really is to have the respective legislative branches in all of these territories look at how can we modernize legislation so that the improvements that are coming on stream from advances in technology, innovation, and that whole customer experience are aligned properly so that you don't have the legislation effectively impeding good customer experience.
Dean, are these concerns that you share?
In the main, I think some territories, in terms of the regulations, there's a lot different to others. I see a difference between the Northern Territories as compared to the EC territories. But the regulators themselves are getting together. They have what is called, I believe it's CARE, the Caribbean Association of Insurance Regulators. They get together to share information to improve the way in which they regulate companies. I think regulation would probably play an important part in terms of the way companies operate from a competitive standpoint, as they move along. If you look at the many territories that we're in fact, the smaller the territory in terms of line size, the more insurance companies they have in that particular territory. You have some territories that have, in excess of 30 insurers in that particular island, whereas others, you have an average around 17, 15. So I would say it varies according to the regulator.
Yeah, can I just add, Dean, the issue as well, and Patrick, Ernie, has to be, from a regulatory standpoint, the pace of change and how slow the process is to get regulation changed in the jurisdictions. I mean, the ECCU has been promulgating this one regulator for the Eastern Caribbean now for, I guess it must be going back 5-6 years, it's got to be some kind of a impetus to get them to move a little bit quicker on regulation. I mean, in Trinidad, I know they passed the law. I guess it went through the full government, whatever, the what do you call it, the regulatory bodies in Trinidad. But I don't believe it's actual law just yet in Trinidad. So, I mean, it's a year on and we still can't get that regulation passed. So I think we have an issue in terms of timing and how long it takes the regulators to actually, let this new regulation become law.
Yeah, I think timing and pace is really the two significant aspects of that. So it's not a question of good intentions or whether or not there's an intent to actually facilitate business being done. But it's really keeping up with the pace.
Yeah.
And you've got developments occurring in the business world at a real-time, significantly faster pace, and the regulatory bodies are just not keeping pace with that. You know, when you look at what's happening in every country in the region, they've got priorities that dominate the legislative agenda. And the question is, how can we raise our concerns to the level where they become a priority so that these things can be dealt with at a faster pace?
Patrick, how are Caribbean insurers addressing the need for talent?
Talent, I think, is going to be one of the dominant issues that we're going to face as carriers across the region. You know, it's a regional issue, but it's a global issue to some extent. And if in smaller countries within the Caribbean, I think, you know, the extent to which there's going to be a problem is going to be magnified because the talent pool is obviously going to be smaller. And, you know, it's an issue that we all have to grapple with. I think I know very few people that entered the insurance industry as a first choice from a career perspective. It was certainly the case when I entered the industry and probably still the case. So I think that we've got a couple of challenges. How do we make this industry attractive to the best and brightest of school leavers, people that we're looking for from a talent recruitment perspective? And then the next challenge is how do we generate sufficient interest, internal focus, and resources towards developing that talent and then retaining that talent over the long term so that we get the benefit of that investment going forward. So, you know, I think there's a lot of heavy lifting involved. We're going to be competing with other industries in the financial services space, particularly for that talent. But the reality is that there's no shortcut to it. You've got to have a very significant philosophy around recruitment, development, and retention so that you get the benefit of all of those activities in the long term.
Ernie, is your organization facing a challenge when it comes to talent? And if so, how are you addressing it?
It is something that everybody has to deal with, and it varies from island to island. There used to be better organized local institutes which helped with that sort of thing, with training, but that seems to have gone by the wayside now. I think it's a wonderful opportunity for young people to really look at an industry and really get involved. There's every opportunity for them. It's a good local market now. It isn't a market that predominantly operated from outside the region. It's all done within the region, and I think it's a great opportunity for young people to make good progress. We in Antigua have just taken over the reins from the local regulator who was going to, or used to, organize the examinations, and then they suddenly decided they weren't going to do it, and so we volunteered to do it, and we will do the invigilating and the regulating of the examinations, and I think that's a good start to getting a good group of young people involved. That's where it has to come from.
Dean, how's Guardian General addressing the talent need?
I think, I think the talent challenge has been around a while. For us in particular, it's when we look strategically, it's not just about insurance experienced talent, but it's about, we think of the future. I think the future is going to have a combination of those skilled in insurance, those skilled in project management, actuarial, and other aspects of business. I think the business is going to change, but we start from from university level in terms of how do you attract talent and build from there. But it's really insurance experienced talent is a challenge.
One more point I'll make on that, John. I think that sometimes we can often overlook the existing talent that we have. So an important part of our strategy from a group perspective really is to look at existing talent that might be reskilled so that we can refocus what they do on a day-to-day basis and utilize the time that they have with us. So that, it doesn't mean effectively that you have to go out there and recruit every time. You can do some internal recruitment. There are people that are interested in learning new things and getting some benefit from a reskill project or program. And we found that to be very useful from our perspective.
Do you find that talent is coming from the traditional channels in insurance, or is that changing?
I think it is changing. I think the demographic of the traditional person that you'd look to is changing as well. And we've had to change the way that we try to recruit persons. For example, for the first time, our organization did a YouTube video to attract people into our organization, into our Future Leaders Development Program. It's the first step we've done something like that. Never would have thought about doing something like that in the past, but it's an element of how do we catch the attention of a demographic profile that is really very different from the time that I would have entered the workforce, for example. So it's a question of, having an evolution of your methods around recruitment to make a difference.
Above and beyond that, has the company had to change its mindset or philosophy to fit the changing needs of new recruits?
Definitely, and so what we're finding is that we've changed the way we've organized workspaces in some areas. We've organize certain units or departments within the company to reflect that change, to make sure that people are working in an environment that is more consistent with what they would want to see, as opposed to us trying to make everybody fit a certain mold. And that's been important in terms of the retention strategy in particular, because there are many choices out there for the best and brightest, and if you don't create the environment that is going to be conducive to what they themselves see as the ideal work environment, you're going to lose that talent.
All right. I'd like to let registrants know that if they have a question for our panelists, you can send that question into webinars@ambest.com, and we're going to do our best to recognize it during our program here today. Patrick, I want to keep it with you. What are you seeing in the way of M&A in the region?
Actually, quite a lot of activity. Some of it well known, some of it not so well known. But if you look at the last 10-year history of what's taken place in the P&C space in particular, I think you'll recognize that taking that retrospective look at things, there's been quite a bit of consolidation of interests, both in terms of the geographic elements to it, and also across product lines. And I think you will continue to see this, because I think companies that are in the M&A space that want to be the acquisitive companies are chasing two things: one, scale, and then second, diversification geographically within the region. And those two things make a lot of sense. So there is a race, I think, on the one hand, for companies that have the resources to effectively execute on that kind of plan, to get to the number one spot, or certainly be within the top 3 or 4 companies in the region, because over time you may find that there are really just 3 or 4 dominant companies within the whole region that are effectively representing the significant majority of the market share.
Ernie, do you think the M&A activity is impacting the way business is being done in the Caribbean?
So did you address that to me?
Yes, I did.
Ernie? Okay. Well, it hasn't happened in quite the same way that people were forecasting. 5 years ago, people were thinking that maybe there's 60 insurance companies in the Caribbean, and that would reduce down to 10 or even 6 over a 5-year period. That hasn't happened. Over the last 5 years, probably 5 companies have changed, either in full or in part. So it is going much, much slower than people were expecting. I think it will just continue at that pace. It's not going to do what they were expecting it to do, to have a very big clear out. In Antigua, for instance, you had 5 local companies who were assumed that they would get together. They are different families, different backgrounds, and there's no way that they would ever work together. So one has now come out of the business, but the other 4 are continuing on exactly as they ever were. And I think that is the sort of thing that's happening in quite a few of the other islands too.
All right, thank you, Ernie. Dean, what role is technology playing, and what impact is technology having on Caribbean insurers?
Before I get to that, if I could, just a point on the M&A activity, which I see, moving forward. I think that is going to be something that will probably increase a bit, and because of I'll say because of the increase in regulatory requirements, is probably going to have some companies consider whether they should continue in the existing way or not. And you're talking about compliance, you mentioned before. There are other capital requirements that will come about in some territories that will be a challenge. I think IFRS 17 will be a challenge as well, for some companies. And I think, where you have single territory writers, being adequately reinsured, it's also going to be a challenge that will make companies consider, whether they continue in the existing way or not. So I just thought I'd put that in, from that standpoint. With respect to technology, I think that companies have no choice but to embrace technology as you move forward. It's going to significantly impact the way in which companies operate. Certainly from the simple insurance lines, the personal lines, as compared to the commercial lines. I think on the commercial line side, it's going to impact the way in which a risk is actually viewed. You probably have a lot more information, the availability of information and the experience with respect to particular categories of risk is going to improve from a commercial side. I think on a non-commercial side, the private lines, it's going to be, just as what we see in more developed territories like the UK and America and stuff. There's going to be a lot more online transactions. There's no two ways about it. So I see the business in the Caribbean being significantly impacted or changed, in the future.
There's something of a technological arms race going on in the Caribbean these days between the haves and the have-nots.
I think there is, and I think this is yet another motivation for mergers and acquisition opportunities, which is part of the scale argument. Effectively, if you've got a larger scale, upon which to make that investment dollar spread in technology, it makes more sense for you to do so. So I agree with Dean. I think there will be a ramping up of that activity related to that. And technology is playing an increasingly important role in our organizations in terms of how we operate, how we deliver services and goods to our clients, and how we deploy a whole host of different things. Our organization is in the middle of changing out the main sort of insurance software that we use as a platform for our main business lines. And a part of that is really sort of this march towards digitization. So it's not just a technology play. There's also a build out of other capabilities that would not have been elements of our internal infrastructure before. So we've got more focus on analytics. We've got far more actuarial input and insight and oversight and involvement in how we roll out elements of our products going forward. And this is, these are all sort of signs of the evolving marketplace changes that is driven by technology, but also the fact that a lot of our clients want to have the same experience that they have when they buy stuff online from any of the major online retailers, because those online retailers are basically creating an expectation in every customer's mind as to how they should be serviced, regardless of whether it's a service-driven industry or a product retail industry where you're buying goods, as opposed to services. So as long as these sort of prevailing issues are out there, I think we're going to have to make a concerted effort to make sure that we have the right technology solutions driving the way that we deliver customer service in order to stay ahead of our competitors.
Finding a lot of use of mobile these days?
Definitely, and if you cannot offer services and deliver products in a mobile environment, you're going to be largely irrelevant to the market in the not too distant future.
Dean, how's your company addressing the need for technology?
Well, in the main, we have to, without giving out too much, it's a lot about being prepared for the next 5-10 years. Most of which we don't know. We don't know what sort of changes will happen. So certainly we can, if you look at it, we have to cater now for the guy who is constantly on his phone. People conduct business using the phone. So we have to be able to cater. From as early as paying the premiums, settling the claims, how do we actually assess our risk, using technology. So I think, agreeing with Patrick as well, I think not only from an analytics standpoint, but the way in which we operate as a business. We have to use technology to be able to cater for the future needs of that, of that policyholder that embraces and uses technology for non-insurance items.
Ernie, Patrick mentioned data and analytics just a moment ago. How big of an impact is that having on the region? We may have lost Ernie there. Patrick, would you like to?
And it's going to be a feature of the way business is done. We have just increased our business analyst resource because we can see that it is very, very important to do it. But you're not going to get an immediate return on it. It's going to take a couple of years before you're getting real value out of it. But it is definitely the way forward.
Okay. Moving along, I wanted to address, and Ernie, why don't we keep it with you? What are some of the emerging issues that you see in the Caribbean market?
Well, apart from the thing that we've already talked about, which is compliance and legislation, just if I can just comment on the legislation of the OECS, we've been talking about this for 10 years, and they just put it off now for another 18 months. I just don't know if and when they are actually going to do it. A couple of years ago, we were talking about where we would base somebody who was very experienced in reinsurance, which is, to me, one of the key issues in terms of legislation and compliance. But that is still a long way off. Every time we have a catastrophe or a hurricane, we find there are a couple of players who haven't bought enough cover or they're undercapitalized, and they collapse, and it's the policyholder who gets caught. So I am really keen that we do get this legislation in place and that we do have a central platform for it, and that we can all work together to make it work. The issues that I see from some of the inspections, the on-site inspections that we get, is that they are, as I already mentioned, they are comparing the little islands with a multi-billion-dollar company in Canada, and that just does not work. The smaller islands, they would prefer to have non-executive directors rather than executive directors, and that is very difficult in the small islands. There just aren't the people there that you can bring in. I don't know whether the bigger islands find that as a problem or not, but we certainly do. I think emerging issues, another of the emerging issues and part of the legislation is to allow international competition to come in. I'm not very keen on that. It'd be very difficult to regulate them, and I'm not sure what they will add to the market that is already there and already coping with all of the issues and problems that you have in running a business in the Caribbean.
Dean, from your vantage point.
Sorry?
I was saying, Dean, from your vantage point, what do you see as the emerging issues?
I'd say the first is, I'll say it's certainly global warming. We're going to see an increase in the intensity and frequency of weather-related losses, and I think that's going to be a big item for insurers. Certainly from the standpoint of your reinsurance purchases, I think things like event limits is going to be a challenge for companies as we go along. I also think cyber-related losses is going to be quite an emerging issue for Caribbean insurers. because again, the impact of cyber-related losses is something that a lot of companies, we don't yet understand, and companies will perhaps start to write more and more of cyber-related type, insurance policies, and I think the intensity or the impact of losses will be something that would be quite challenging in terms of how those losses are settled. I mean, not being emerging, but certainly an issue would be, adequate pricing and the adequacy of sums insureds. I think that's going to be again an emerging issue in terms of, because we see time after time, where you have a loss and it's always inadequate values, where average is a feature of not having claims fully settled. It's not until you have a loss then people understand what is average and why aren't they adequately insured.
Nodding your head in agreement there.
I do. It's an issue that we confront with every catastrophe loss and even on regular losses on an attritional basis. But I do have an emerging issue that's a little bit more sort of a practical issue that I think has two elements to it from a timing perspective. One, we're seeing now sort of coming into the frame more frequently, and I think this is something that's going to impact the industry in a broader sense even further out. So the long-term effect is effectively, what's going to happen with the motor market, right? You got developments around the globe in terms of technology being put in vehicles that relate to autonomous, semi-autonomous vehicles, and who knows what the impact will be down the road in terms of whether or not there will be a motor market the way that we currently know the motor market exists. So that's one issue, but that's longer term. What's more concerning in the short term, though, is that our organization did an assessment of the state of the repair garages in our country relative to, or we benchmark it against what would be a best-in-class repair facility, using one of the states as a benchmark against it. And the assessment showed that there's a significant gap between what would be the best in class in the Florida market compared to what's available in the Bahamas. Now, what's the impact of that? The impact is this. As you put more technology in vehicles, as you ramp up the sophistication of cars, what happens is that the repair prospects or the ability to repair that car in a state, in an island like New Providence within the Bahamas or anywhere else in the Bahamas for that matter, is being impacted by that. So the repair facilities are not keeping pace with the pace of technology and improvements that are being made. So what does that mean? It means that we're effectively not able to provide the same level of indemnity because the vehicles are not being put in place or not being repaired to the standard that we'd like to see. It's not causing a major issue now, but as that gap widens in terms of technology being put into vehicles and the repair facilities not being able to keep pace with that, our customers will see that as a deficiency in the delivery of service from a claim perspective. So, we've got to find a solution for that, and whether it's a collective solution by all of the insurers getting together to look at it and assess what could be done on a broad base, or whether companies are going to take it on an individual basis. The issue is that in the short to medium term, this will become a bigger issue, both from a cost perspective and also the quality of services that we're delivering to our clients.
Interesting. Is anyone addressing that right now?
I think the first question is acknowledging that there is a gap.
Okay.
So we're at the point now where, we're now starting to acknowledge that there's a gap and that the gap is going to widen unless there are improvements made to sort of do something about that. And I think it will get worse if we don't start to attack the issue right now.
All right. Thank you, Patrick. Dean, how has reinsurance capacity been in the past year?
Sorry, I was just going to add to that point, actually, in terms of what Patrick was speaking about. Another has to do with the underwriter and the knowledge of the underwriter. And again, in the future, the knowledge of the underwriter is one where you'd have to understand the change in technology, all right, which is, so to be able to underwrite something, you need to understand how the thing operates. All right, and by understanding the way in which this operates, it's then you'll be able to have an assessment in terms of how it will impact to losses. So I think technological advancement is perhaps moving much faster than the underwriter's knowledge level. And I don't know, Patrick, if when you agree with that point. We're seeing a fast pace of technological advancement, and I think underwriters are perhaps not are underwriting things and applying a rates, but not knowing, how this thing could be impacted, by the exposure of, the elements. I don't know if Patrick or Winnie, agrees with that point.
I do, Dean, and I think I'm going to upset my colleagues back home, but I think sometimes we have an analog approach to assessing risks in a digital environment. So they've heard me say that before, and I'm not criticizing them. So I hope no one does anything to my office until I get back.
All right, sorry, John, what was that question again?
So how's reinsurance capacity been in the market?
I think I don't want to start by saying, perhaps that is that's the issue that we face as I guess insurers in the Caribbean market. I think the availability of capacity is perhaps what has caused some markets to have rating levels that are much less than where the risk for that territory is. So the availability capacity is there. The availability of quality capacity is around. So there are no issues with regard to that. I think if capacity is restricted, then you'll perhaps have pricing levels that are not only more profitable to insurers, but I think are more stable to policyholders, after loss.
Okay, thank you, Dean. I want to circle the panel at this time and ask each of our panelists what should we expect looking ahead? What should we expect from the Caribbean market? And Ernie, why don't we start with you? What are your expectations looking down the road?
I'd just like to comment on the reinsurance capacity of this past year. Clearly, there has been an excess. You're beginning to see some movement by one or two reinsurers who are reducing their capacity. But I think it's true to say that none of the 6 or 7 large reinsurers who really control the market have got what they wanted in 2018 or 2019. And I think it's going to be interesting to see what their approach is going to be for 2020. I think it is possible that there's going to be a hardening of the market. At the moment, people still think it's a soft market. And I have to say that when we did our renewal on the 1st of January this year, we were really way over what we needed in terms of market. But I do think that they are concerned. They haven't got what they wanted. Rates are not holding up, even in the territories where we've had major losses. You're finding there that rates are already beginning to slip. And I think that reinsurers are going to take that into account. And I think we could be experiencing some problems in 2020 that we're not expecting.
Dean, what are your thoughts? What should insurers expect looking down the road?
I think down the road, one, you'd have certainly an increased regulatory environment. I think that is going to happen. I think you'd have, I think perhaps what is needed, I would say, is a consolidation of the market. I think we have too many insurers in the territories. All right. I think the competitive levels that we see we have been hoping would change, would perhaps not change. I think increased competition and these increased competitive levels will be the norm. I think a lot of companies will then focus on their expense levels, and that is where embracing technology is going to be a big feature moving forward.
So I agree with a lot of what he just said. I think there are a couple of things I'd add to that. One is that I think it's become increasingly clear to us that as you navigate the landscape where you've got increased competition, you got all these other influencing factors that are impacting your business, there is an opportunity to collaborate with business partners that you trust, The rationale for that is clear. I mean, if you're a company of a certain size operating in a limited market space, and you've got the ability to tap into global companies that have a broader reach, that have the resources and the willingness to work along with you, then that, to me, that creates an opportunity for effectively leveraging the strength of that bigger organization to your benefit. We've done that a couple of times. We're going to continue to do that because I think it makes sense for us to do so. And it gives us an opportunity to more successfully navigate the challenges that we're going to see emerging in the landscape ahead, as opposed to trying to go it alone and to do it on our own, because that's just not going to be possible given the ramping up of the competition, which, by the way, will in the future also involve potentially more reinsurers playing in the retail space in the Caribbean, as opposed to just sort of staying within their element of their market niche as being the risk takers primarily. We see evidence of that already, and I think that's going to perhaps increase. So for us, it's focusing on the key elements that Dean spoke about, but then also looking at the challenges as opportunities for collaboration with like-minded organizations to sort of get us to a better place down the road.
Okay, I want to bring in our AM Best analyst for that very same question. And Ricky, what are your thoughts? Looking ahead, what should we expect out of the Caribbean market?
Well, I think, the panel discussed a lot of the issues that from a rating perspective that we see here as some of the issues going forward, John. Our rated universe of PC companies covers 19 companies in 10 different jurisdictions. We have continuing soft markets that are going to prevail, and the panel touched on that already. Abundant reinsurance capacity, which it drives pricing, so we're going to have soft markets that are going to prevail. In some territories, we have international players. I know in some territories, Lloyd's writes business directly without having all the costs that a bricks and mortar insurer would have. Dean hit on this as well, and echoed by Patrick and Ernie, increasing regulatory costs throughout the region. As I mentioned earlier, the ECC proposed one regulator for the 8 territories that comprise them, but we haven't seen that come to pass. Another issue that they faced with is limited investment choices that we've talked about throughout the discussion here today. It varies by territory, but primarily in some territories you can't invest other than in local investments. So that's a concern. One that I didn't hear the panel touch on too much was economic uncertainty in the region. A lot of these territories are going to be faced with rising debt levels, government fiscal debt levels by the government, which could impact the environment in which they operate. And I think one that is not yet quite on the radar, and I had polled them individually when earlier in the year, is the ECCB's blockchain project that would have ramifications for how they do business in the region. They're talking about issuing an a digital EC dollar, but it's early days yet in that project. I think they're projecting out for 1 year testing and then another 6 months for rollout and implementation. So that's going to be a long ways off, but that has potential operational and financial implications for every insurer and financial institution that's actually doing business in any of those territories. So having said that, the R-rated population has traditionally had very good reinsurance in place. So capital management strategies has been very sound in the population that we look at. So I think they've managed their businesses and their portfolios very well over the years in different cycles. So I expect that they will continue to do so, especially in years that are not affected by catastrophes. So that's what I would have to say about the region.
All right, Richard, what are your thoughts?
Yeah, I guess on the life and health side, probably 2 things. The life side doesn't have the volatility that's seen on the P&C side, but it is heavily dependent on tourism, and we are seeing a lot of construction increasing number of rooms and capacity available. So tourism has been increasing. So that should have a positive impact going forward. And on the health side, the types of treatments are constantly changing, and it's a challenge for the health insurers to adequately price those products. So it'll remains to be seen how they keep up with that.
Okay, thank you, Rich. And thank you, panelists, one and all, by the way, for an outstanding presentation here today. Before we do leave, we'd like to let registrants know that you can look for the soon-to-be-released AM Best 9th Annual Survey of the Caribbean Association of Insurance Regulators. That should be out in the next day or so. And also, AM Best's Carlos De La Torre will be speaking at the Caribbean Association of Insurance Regulators Conference. That gets underway on Wednesday. We will have a full replay of this webcast up within the next day or so. A full transcript will be out within the next couple of weeks. For AM Best, I am John Weber.